Hey guys, so we're back again with another stock investing video. And so today we're going to take a look at PayPal based on some requests from some of our Patreons. All right, so PayPal is a very interesting company, and as many of you guys may know, PayPal is a payments processor that has really taken the world by storm. It is the largest payment processor in the world, and today we're going to examine whether PayPal is possibly a good investment at this point, and what are the pros and cons of this company. What are the things going for it and going against it? So this is actually the second PayPal video that we've done. So you can check our earlier videos to check out what we had to say about PayPal in the past. I know it's a really interesting time to look at PayPal. As you can see from the price chart graph, PayPal has been growing steadily. Well, the share price has been growing steadily from its IPO around 2015 up to 2019. Then there was a huge spike during the pandemic where payments processing became very in vogue because many people questioned, whether we will be how soon we'll be back out in the public and actually conducting business face to face. And so payment processes like PayPal got a huge spike, as you could see. Um, at its peak, it got to in the vicinity of $300 per share. And now we've seen a spectacular um, decline in value from about $300 to now present day being about $63, $60 odd at this point in time. So in the space of what, a year and a half, PayPal's price has cut from $300 to $60. So almost what, an 80% cut in valuation. And at times like these, this is at times when value investors like myself actually get interested in stocks like PayPal. So let's take a quick look at how PayPal has been doing over the past couple of years to see if I guess some of this price decline is justified. And so, as you guys know, we have the um, 10 plus investment checklist that we use as a screener to determine whether a company is something that we might be interested in that touches on its financial metrics, its management performance, and also takes a look at the sector more broadly. And so, the first thing that we look at is the revenue. And you can see that PayPal's revenue has grown consistently over the years. Um, Not growing quite as quickly as it was in its early days and during the pandemic. And you see the revenue has actually been going up um, consistently for the past 10 years or so. So that is a positive. Um, Second thing that we look at is whether it's profitable or not. So the earnings per share has actually been going up as well. So it is becoming more and more profitable over time. There has been a drop down in profitability um, in the last year or so compared to like 2021 and 2020. But I think that is just due to the exceptional circumstances that occurred during the pandemic, where there was a lot of payments processing going on just by force because people were not transacting business in a normal way using cash and other mediums. So I think that the decline in earnings per share or profitability per share um, is somewhat justified. Um, the third thing that we look at is free cash flow, and obviously we like to see free cash flow increasing. And you see that free cash flow has been increasing for the past 10 years or so as well. Yeah, but generally increasing. A slight decline on the free cash flow per share in the past year or so compared to during the pandemic. But again, it remains to be seen, or is questionable to me, whether that slight decline in free cash flow yield is warrants the sharp decline in price that we've observed over the past year or so in this stock. All right. So the third question we usually ask is if they pay a dividend, but PayPal at this point does not seem to pay a dividend, and that is understandable for a tech company and one that still has growth prospects. So that's a check as well. So The fifth question that we ask, and this one is a little bit subjective, is how good is the economic moat? And this is where it gets interesting. So, tech companies usually go for scale, which makes them hard to displace as the incumbent in the area. And PayPal, as I said before, is the dominant player in payments processing worldwide. However, there is competition on the horizon. So there's companies like TransferWise, which I actually use personally, um, which has been, I guess, growing in adoption worldwide. And there are some others that have started to give PayPal competition. And this prospect of increased competition is why I think a lot of investors got spooked, because PayPal's moat, economic moat, as Warren Buffett termed, is not as wide and as entrenched as I guess originally thought. But when I examined PayPal's, some of their competitors like TransferWise and a couple others, they're actually not very big. PayPal is in some cases at least 10 times bigger than some of their competition or so-called competition. And so I suspect that the prospect of increased competition, at least for the foreseeable future, let's say next 5 years or so, 5 to 10 years, may be a little bit overblown in terms of um, the potential impact on PayPal's margins. However, the CEO of the company recently stated that he expects a slight decline in margins, operating margin, I believe it was, over the next year or so, and that little wobble has, caused the share price to drop from $80 to about $60 in this space of a month. So, apart from the long term decline, well, the longer term decline we saw in the past year and a half, there was also a drop in the past month or so based on that statement alone. However, what people don't often recognize is that the CEO actually projected a pretty rosy outlook for the rest of the year. It's just that operating margin, that one metric might be a little bit lower. And even by then, I think it was from 14.9% projected to 14.5%. And I think that's still pretty good. And so I suspect that this price decline maybe a little bit overblown. So the economic moat is not wide or as wide as originally thought, but I think that they still are a long ways away from being challenged as the major player in that area, in this area. Right. So moving on to debt. Do they have too much debt? That is one thing that we look at. And so we're scrolling down here, looking at the total assets of 78.7 billion. Yes, 78.7 billion, and total liabilities of 58.43 billion. So you see that so PayPal is in a good footing. They are definitely solvent, and looking at more liquidity side, so the more current assets and current liabilities. So in terms of current assets, which is assets and liabilities that pertain to the current 12-month period, they have 50.9 billion in current assets and only 38.4 billion in current liabilities. So it's very hard to go bankrupt when you have more money than you have outstanding debts, and I think PayPal is in that position. So that's a definite plus for this company. All right, moving on quickly. How good is the management? And the metric that we use to analyze, I guess, the ability of management is the ROIC, or return on invested capital, which has averaged in the, I guess I'd say, the low teens, about 10, 11% for the past couple of years. It has reduced a little bit in the past year or so to 7.8%. And so that is one of the things that is a bit troublesome. And I know that some big investors, for example, one of the guys that I really idolize, Terry Smith, one of the reasons that he moved out of this company, the Fund Smith capital, is because of this decline in return on investment capital over the past year or so. But hopefully, this is another case where Terry Smith is wrong and us PayPal investors are right. Another management related metric that we use to get greater sense of where the company is going is looking at does management own stock. And so looking here at the top left hand side, we see that the percentage of shares held by insiders is only 0.21%. That is interesting because um, it's a quite small number, but to try to rationalize it, um, many of the early founding members of the management team, like Elon Musk, I believe Peter Thiel was involved in PayPal as well, would have sold out of the company, I think, even prior to the IPO, when they initially sold to eBay. And so a lot of the early founders uh, may not be shareholders anymore and may not be major shareholders anyway. And so, unlike other companies that we really like to invest in, where the founders still own a lot of shares and better yet, actually still manage the company, or at least on the board. That is not the case in PayPal, um, which is, I guess, somewhat understandable given the size of the company, um, and how the company, I guess, how they have developed over time, with many of the early founders going out and doing their own ventures. In fact, some of them have gone on to do such great things and have such a strong network that they've actually coined it term the PayPal Mafia, um, because there's still a strong network coming out of all the early hires and early management of PayPal. But to more recent times, let's just scroll down and see if there's any insider buying. And we see here that there hasn't been, there's some transactions in the past year, this current year. Um, Not a lot of buying, especially buying with their own money, it seems like. So that is more of a positive signal that we look for. We like to see if the CEO is buying shares in the company, if they considered undervalued at the time. So this is a metric that we need to keep an eye on to see that if the price stays at this current level or even declines further, whether the CEO, CFO, and those people who have more insight into the company's prospects than you and I, whether they see it as a great time to buy or not. So that is something to keep an eye on in the future. All right. And so the next thing that we're going to take a look at is, am I being diluted? Is the common shares increasing, decreasing, or is it staying steady? And from 2015 till now, the common shares outstanding has actually declined somewhat. So that is a good thing. That means that investors like you and me are actually owning larger and larger portions of the company just by maintaining our our stock holdings in it. Right. So they're actually using excess capital to buy back shares, it seems. So which is a good thing for us. Right. And the last question is, am I buying at a discount? Now, that is also a subjective question. How do you determine whether you're buying at a discount or not? From my calculations using the current price to earnings ratio versus historical price to earnings ratio, it is way below the historical price to earnings ratio that we've seen in the past. And so that is an indication, at least to me and to many others, that PayPal is actually undervalued at this point, and maybe this might be a great opportunity to see whether this company is a buy for you. Of course, this is not investing advice, and I encourage you to do your own research. And one thing to possibly keep in mind is the prospect of future competition in the future, whether this would derail PayPal's prospects or not, or whether you think they could withstand the competition that is coming. So, with that, guys, I really want to thank you for checking out this video, and I hope you subscribe, like, share, and see you again for the next video. Ciao. Hey guys, thanks for checking out our video, and be sure to like and subscribe for more great content.